Good day, my name is Ren Steven F. Santos from BSTM 15. I will discussing the additional fund needed and financial statements. For the current Brain Company, income statement for the year ended December 31, 2022. Sales is 8,500,000, income of sale is 5,100,000, gross profit 3,400,000, operating expenses 2,500,000, income before taxes 900,000, income tax 270,000, net income 630,000. In the Brain Company statement of financial position, as of December 31, 2022, current assets is 5,100,000, in non-current asset is 4,500,000, the total asset is 9,600,000. Current liabilities, 2,125,000. Non-current liabilities, 2,875,000. Ordinary shares, 3,600,000. Retained earnings, 1 million pesos. And the additional funds needed, total liabilities and shareholders' equity is 9,600,000. For the additional information, 1 is dividends paid out of 360,000 earnings in 2022. Amount to 378,000 pesos. 2 is only current assets and current liabilities are directly related to sales. 3 is the business expect 15% increase in sales next year. 4 is the business is expected to retain 40% of their earnings next year. So based on the problem given above, answer and discuss the following question. So number 1 is, what is the expected increase in sales? So we're going to multiply the sales, which is 8,500,000, to the expected increase in sales next year, which is 15%. So the answer is 1,275,000. For number 2 is, what is the rate of spontaneous assets to sales? So we will divide the cost of sales to get the rate of spontaneous assets to sale 5,100,000, which cost of sales divided by 8,500,000, or the sale which 0.6 and multiply by 100, and the answer is 60%. So number 3 is, what is the expected increase in current assets? The additional information indicated that there's a 15% increase in sales. Next year, we need to multiply the percentage by the current assets, which is 5,100,000, to get the answer 756,000. Number 4, what is the rate of spontaneous liability to sales? So to get this, we just need to divide the current liabilities, which is 2,125,000, to 8,500,000, where the sale is equal to 0.25 multiply by 100. So the answer is 25%. For number 5 is the spontaneous increase in liabilities. So you just multiply the current liabilities, 2,125,000, to the expected increase in sale next year, which is 15%. The answer is 318,750. So number 6 is, what is projected sales? So first is, we need to add 100% the expected increase in sales next year, which is the 15%. So we had 1.15, then multiply the current assets, which is 5,100,000 to 1.15. So the answer is 5,865,000. Number 7 is, what is the projected cost of sales? So it's just same procedure to number 6, just multiply the current assets to 1.15, and the answer is 5,865,000. For number 8 is, what is the projected cost of profit? We just need to multiply the gross profit, which is 3,400,000, to 1.15, or the expected increase in sales, and the answer is 3,910,000. For the number 9 is, what is projected operating expenses? So we need to multiply the operating expenses, which is 2,500,000, to 1.15. So the answer is 2,875,000. For number 10 is, what is the projected net income after tax? So just multiply the current net income, which is 630,000, to 1.15, and the answer will be 724,500. For number 11 is what is the increase in retained earnings? Multiply the projected income after tax 724,500 to 40%, which is the expected retained earnings next year, and the answer is 289,800. For number 12 is what is the additional fund needed? We just needed subtract the current assets 765,000. The spontaneous is current liabilities 318,750, and increase retained earnings, which is 289,800, and the answer is 156,450. For number 13 is what is the total current assets in projected FS? So we just need to multiply the current assets by 5,100,000 to 1.15, and the answer is 5,865,000. For number 14 is what is the current liabilities in the projected financial statement? So just multiply the current liabilities 2,125,000 to 1.15, and the answer is 2,443,750. For number 15 is what is the retained earnings in the projected financial statements? So we just simply adding the retained earnings 1 million to the increase in retained earnings 289,800, and the answer is 1,289,800. And for the last, number 16 is what is the total assets in the projected financial statement? We just add the current assets in projected FS 5,865,000 to non-current asset is 4,500,000, and the answer is 10,365,000. For you to fully understand, I will present my raw computation. And that's all. Thank you for listening.